With inflation, global conflict, and rate hikes, gold is sending a clear message. Are you listening? Hey everyone, and welcome back to the Bullion Investor Report presented by Anchor Bullion. We're diving deep into the world of precious metals again today, ready to help you confidently navigate the market. We are excited to be joined again with Peter and Cheryl.
Glad to be back, helping to shed some light on all things bullion.
Absolutely.
And today we're tackling a big one: gold price trends and forecasts.
So we're on a mission to give you that solid understanding of the historical patterns, the current market forces, all those things that can really impact gold prices. So let's kick things off with a fundamental question. Why is it so crucial to understand gold price trends and forecasts?
Well, gold has always had a strong reputation as a way to preserve wealth. Many people see it as a safe haven during times of economic uncertainty. So getting a grasp on its price behavior and the factors that influence it, well, it's crucial for anyone looking to protect and grow their capital.
Makes sense. And there's not just one or two things that affect gold prices, right? It's a whole web of global influences.
Exactly. We have things like inflation, central bank decisions, geopolitical events, even shifts in currency markets. All of these things can push and pull gold prices.
That's a giant puzzle.
In a way, yeah.
Okay, so let's start with a trip down memory lane. Yeah. What can we learn from the history of gold prices?
Looking at historical gold prices gives us invaluable context. We can see how gold has reacted to different world events over time.
Let's talk about some of those turning points. I know the US moving away from the gold standard was a huge deal.
Absolutely. Back in 1971, when the US ended that direct link between the dollar and gold prices were basically free to fluctuate.
And that caused a big shift.
It did. This change in monetary policy, along with the growing economic concerns around the world at that time, really made gold appealing as a safe haven. The price jumped significantly.
How much are we talking?
Well, it went from about $35 an ounce to around $200 in just a decade. It was a real turning point in how gold was viewed and traded.
That's a massive jump, and I think the early 1980s saw another big climb, right?
Yes. In 1980, gold hit a peak of around $850 an ounce. High inflation was a big factor back then, driven partly by energy crises, and there was a lot of geopolitical instability happening, like the Soviet invasion of Afghanistan.
That makes sense. But then came 2008 and the financial crisis.
Right. That crisis, with all the fear of economic collapse and potential currency devaluation, pushed gold prices way up. By 2011, gold reached a new record high, $1,895 an ounce. It became a refuge for investors worried about traditional markets.
And more recently, we had a COVID-19 pandemic.
Yeah, in 2020, the uncertainty surrounding COVID-19 triggered another rush to gold's safety, pushing it to an all-time high of $2,075 an ounce. It really solidified gold's reputation as the go-to asset in a global crisis. Between 2022 and 2023, when interest rates were rising, which usually makes holding gold less appealing, gold prices stayed pretty strong.
Wow, so gold has really proven its worth over time.
It's a resilient asset.
So the big takeaway is that gold really does act as a hedge against economic instability. It's a valuable asset for long-term investors who want to protect their wealth.